it is if you just can't change this one thing, which is, exiting the bad trades, right? A lot of people tend to bag hold options, which is completely wrong. Unless you're short selling the options, you shouldn't ever play that strategy because you will lose 90% of the time. And we're going to kind of go over that as well. And we're kind of going to, kind of go a little bit deeper into it as well, right? And let's go into the next kind of, slide here and kind of talk about this, right? A lot of you guys want to make a lot of money in trading, right? You want to make 100K a month, 200K a month, 500K a month, right? Or even 20K a month, 30K a month, right? To go even lower, $5,000 a month. All of it starts from how you treat trading, right? If you treat trading as gambling, it's going to be worse than gambling because you're going up against people like me, right? Who put in the work, wake up at 5, right? Who look at the charts before they kind of go into any of those trades, who have years of experience, right? Imagine playing poker with somebody that has years and years and years of experience. You'll probably lose like 90% of the time. But if you go into, for instance, blackjack, and, you kind of know a little bit about blackjack, like there's a 50-50 chance you'll win. Well, that's not trading. Like if you actually go into trading and you have zero experience and you want to actually make money, right? You need to go into it with a plan, right? You need to learn how to be able to basically follow a plan, follow a rule book, and try not to lose. Because if you can just follow a plan and build a plan for yourself, I think that's 80% of the work done, right? And then the 10-20% is, very easy to just kind of follow, right? And we'll kind of go into that as well. So a lot of you guys, first of all, turn on the notifications for the chat room because some of you guys don't even have that. And that's kind of the first step of, being able to follow signals, be able to make money in trading, right? And this is one thing that a lot of people kind of miss out on because they subscribe to the signals, but they don't actually even know how to follow them properly, and they end up missing the trade. Then they chase and then they lose money. So just the simple steps out, have the notifications on. So second thing, we're going to be talking specifically about our chat room because we have two different types of trading style, right? You have Raj's trading style, and then you have Nick's trading style, and which is basically kind of like my trading style, all right? And Raj's trading style, he basically sends out weekly options. So if you guys didn't know, I used to trade, stocks before this. Before that, I used to trade penny stocks, and in between, I used to trade futures, and then I kind of moved over to options and kind of, started trading weekly options. If you guys didn't know, check out some of the YouTube videos. You'll see where we used to trade weekly options for Tesla, risking like 250K per trade on Mondays because, well, Tesla ran from 200 to 1,000, and Tesla options looked something like $7, $10, $15, $20. And we used to try to make $5 every day, right? And have like 100 contracts and try to make 50K a day, right? All of this, like you can always make money any which way in trading, but with the weekly options is a little bit safer, right? If you put in, let's say 250K, because the time value, you have basically 7 days left, there's a much more likely chance that you won't lose all of your money the first day, right? If you hold, for instance. And this is why we kind of brought Raj into this to make it kind of honestly easier for everybody that day trades basically options who's a beginner, because this way, guess what? You guys can actually start to make money even if you make mistakes, right? Because some of these options, they'll come back, right? Analysis is very, very good. Sometimes it takes a time, right, for the analysis to come true. And even if you kind of bag hold these weekly options, you have a, 50-50 chance that by Friday, there's a chance that your, cheaper options that you buy can come back, right? It doesn't have to, but it's a very slight chance, right? Because you're giving yourself, 4 days, 5 days. And then as it goes through the day, week, I mean, look, your $7 options on a Monday turn into $3 on Thursday. So that means, right, your options lose money significantly, kind of faster on Thursdays versus Fridays as well, and, versus Monday and Tuesday. So you need to kind of understand what kind of trading style you're doing. And this goes back to the same thing. Eliminate emotion by building a plan. What kind of a trader are you? Do you like weekly expiries, right? Or even if you want to trade my and Nick's trades, but you want to trade them with 1 day extra expiry that gives you a little bit more time. So even if you do like to bag hold and the play goes against you, you can hold a little bit longer and see if by end of the day the stock ends up doing what we thought it ends up doing, which is like 80-90% of the time. It's just because when you trade, same day expiries, they expire so quick that you end up losing the money right away. So it's very, very difficult for people to, come back. So you need to build this plan out because I cannot sit there and build a plan for you guys because I'm going to trade the way it makes me money, right? At the end of the day, if somebody is out there that's trying to do you guys, put you guys first, right? And then put themselves afterward, I promise you, they're lying to you, right? You're being told the lie because I'll always try to, go after my strategy first and the way I trade first. And I'm always going to trade the way that makes me money and then look at you guys and see if, you guys can, execute quick enough and do this and do that. But all of this can be solved simply by sitting there with a paper and a piece of pen, a pen and a piece of paper, and writing down a plan of, your executions and how you're going to enter and like what expiries you're going to play throughout the week and how you're going to manage the trades, right? Because look, for the weeklies, right? Look, Monday, for instance, to give you guys an example, Tesla, right? If Tesla makes a $2.50 move and you want to be try to be consistent, right? If you're trading Tesla every day, you want to be able to try to make consistent type of trades, right? So if I'm trading Tesla every day, for instance, and I'm making, let's say, $2.50 on Tesla, right? When it's around $300, and the range of Tesla every day is, let's say, $9, and I'm making only $2.50 out of it. On Monday, that's going to be 35% on my money because these $2.50 move on the options, right, is going to be about 35% for a $7 option. On Tuesday, that's going to be 40% for a $6 option. For on a Thursday, it's going to be about 83% out of those $3 options, right? On Friday, it's going to be 140%. Even though you're playing the same dollar amount on the stock, but the underlying options for the weekly are going to give you different results, right? So you need to manage. You cannot go Monday with, let's say, 100 contracts and then play 100 contracts again on Friday because on a Monday, if you try to look, Monday, you're going to get 35% for the same move, right? Versus you're going to get, on Friday, I mean, you should go with the same contracts. I'm really sorry, but you shouldn't go with the same amount of money when you're trading the weeklies. Meaning, like if you're trading, let's say, with $1,000 worth of contracts, right, and you're trading only, let's say, one contract, every day, it's not gonna be, as consistent, right? If that makes sense, right? But kind of the idea goes back to building that plan, right? Like on Monday, if you're going to trade, let's say, one contract and you're going to buy one $7 contract and you're going to look for $2.50, stop worrying about the percentage, right? Stop worrying about the percentage, right? If you're going to look for, the same type of move, stop worrying about the percentage. But if you want to kind of, put in the same amount of money, meaning if you want to put in about, let's say, $2,000. So Monday you can buy three contracts, right? Then you're going to make about 30%, right? And but and then on Wednesday you're gonna make 55%. And this all is gonna come into handy when we talk a little bit about the same day expiries, right? And bear with me. I know this is a little bit might be difficult for like the beginner people to kind of understand, but this really does matter, right? Like these weekly expiries, right? Like do end up confusing people a lot because when you're trading the same day expiries, what happens is you're trading the same contract pricing around $1 and you're looking for the same type of move. 30 cent up, that's 30% every day. Consistent, right? Where these weekly expiries, you're looking for different moves, different stocks, different, so you also have the benefit of being able to trade different stocks other than SPY and QQQ, right? And so plus and minuses, and this is why I go back, right? NDX, we'll talk about NDX later, man. But go back, build the plan, please. Like I'm telling you, it'll change your trading, right? Go do a journal on how you want to trade, you know, and go back to the chat room too, right? Like go back and see the plays, right? If Raj hits consistently 20 to 30%, then you should not aim for more than 20, 30% every day, right? Simple, right? If Raj consistently, gives you plays of 20 cents to 30 cents on the stock, then you should play that, right? And always try to manage your risk. And that's kind of what we're going to talk about next. But this is a chart that I kind of built out for you guys, right? Um, on Monday, you should look for 10 to 15% if you want to keep it consistent, right? So if, for instance, you're putting in $1,000, right? Um, or even like, let's say you're trading one contract, right? Doesn't matter uh, how many contracts you're trading on a Monday because the options are much, much more expensive. Try to only take about 10 to 15%, right? Of how much you put in, right? And then Tuesday, right? 15 to 20%. Wednesday, 15 to 30%. Thursday, 25 to 40%. And then, same thing on Friday, 25 to 80%, right? And so this way you can kind of put in that, okay, Monday, I'm only going to be aiming for 10 to 15%. So I should be trading with $1,000. On Tuesday, I can get a little bit more. So I should be trading with maybe $900 or $800. On Wednesday, I should be only trading with about, $700. And then Thursday, uh, I should only be trading with about $500. And then on Friday, I should only be trading with about, guess what? $200 because I'm trying to go for 50% average, right? So you need to bring your money that you invest every day with the zero DTEs down over time. Because if you don't do that, guess what? You're just setting yourself up for losing. Because let's say Monday you made money with $1,000, you made 10%, you made $150. Let's say Friday you lose 25%, right? You lost $250. You're setting yourself up for failure if you keep consistently, putting the same amount of money. So with this, you need to kind of understand this for the weeklies. But with zero DTs, look how even it is, right? 30 to 60% is our average every day. You're trying to get this in the morning. And then in the afternoon, you're looking from anywhere from 40% to 100% every day, right? And sometimes you guys know we go for 200, 300%. And we're going to talk about some of the plays that we take, throughout the week and, like how they did versus where we got out and so on. Because this is realistic trading, right? This is not trading where you're kind of, we're going to lie to you and we're going to tell you, right? You should be looking for 500, 600%, 700%, because it doesn't work like that. And even if we do get that on a play, doesn't mean that we're going to capture all of it. We only capture 70% of it, 80% of it, and you guys will see like what I mean. So going back to, avoiding one of the biggest wrongs in trading is this. Somebody will come in and you'll make money because I see a lot of people make money every single day. What happens is they mess up on the day where you lose. Okay. I don't know how it happens. I don't know. Maybe it's the sizing. Maybe you guys don't have proper stop losses, but it all comes down to simple as this. I think you guys just hold options for longer than you need to. You have to understand that options trading or day trading is supposed to be 5 to 10 to 15 minutes, no more than that, right? So look, if Monday you make 3,000, Tuesday you make 1,000, and then you make another 1,000 on Wednesday, why are you giving back all of the money on Thursday? And the fact that this guy actually made 2,000 on Friday is crazy because most people would try to make this whole 5K in one day and lose more money on Friday, right? Adam, I'm holding way too long, Adam. Yeah, we're gonna talk about this and we're gonna try to basically fix that for you guys. Watch, like the next three slides, I think are gonna be game changing to kind of blow your guys' mind away on how simple it is to improve this that you're talking about holding too long, right? But same thing. Look, if you lose 8K, it's gonna take you very long to be able to make, if you're consistently only making 2K or 1K or 1K or 1K, right? Right? And just kind of the understanding is that we all need, if you were to lose 2K here and you make 2K the next day, amazing. I don't think there's any better traders out there that have even a one-to-one risk reward. If you have one-to-one, bro, amazing. Look how good this trader is. The fact that he's able to be green 4 days out of the 5 days, consistently 4 weeks out of the four basically 3 weeks out of the 4 weeks is amazing, right? And he's only problem is that he's just losing way too big when he's losing, right? So if he can just fix this and make this into 2K max loss, right? Where let's say on this week he made a 2K max loss, guess what? He still would be up 5,000 in the first week. Second week, right? He'd still be up 3,000. Third week, he'd still be up almost, let's say 2K, 4K. And let's say this week, he ended up being up only 2K. But look, do you see how it changes the game of this guy being red consistently to being green by just maximizing the loss that he can have, right? So if he loses 2K here, he makes 2K again, that's even, makes 3K, makes 4K, right? So basically 4K up and then loses another 2K, he's still up 2K. So we're going to talk about this. Let's go into it. What do you need to be able to make $100,000 a month, right? I promise you it's super simple if you just follow the rules, but a lot of traders will fail at this, right? They won't just be able to get through this factor of it, where if you just cut your losses, right, 1 to 1 at least, which is even bad. Oh, you guys will see what I mean, right? Like cutting your losses at 1 to 1 is even bad, right? Very rarely you should be losing 1 to 1. You should max be losing break even or a little bit less than break even, right? And I'll kind of explain that to you guys on the charts as well, right? So, what do you need to be able to make $100,000 a month? Okay, look, a lot of you guys are probably here, right? Small green, small red, small green, big red, right? Very frustrating, right? This is where a lot of you guys are. This is where you need to be a very, 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 very good profitable trader, right? You don't even need to be here. You could even have, a couple of small greens, right? You could have one or two big greens or three big greens and then have small green or even just have, for instance, even if this was a red trade, that's fine, right? You could have three big red green trades and have two red trades and you'll still be doing very, very well. And you guys will see this in the next couple of, trades, in the next couple of slides. So what do you need to be able to fix that, right? So, what do you need to be able to go from basically here, right, where you're at right now, where, most of your losses are 2 times bigger than your greens. Make your stop loss smaller or make your targets way bigger. Simple. Literally simple. Chart's going to move one way or the other, right? There is a little bit of a idea of charts. Like to give you an idea, look, these options went from 20 cents up to $1.30. Guys, that's almost 5 to 6x how much these options move, right? So even if you are to able to make your, your entry at 30 cents and your exit at 60 cents, right? And your stop loss at 10 cents, you still have a very like 1 to 6 risk to reward, 1 to 3 risk to reward. So being, like this, like making your greens be really, way bigger than your losses is not hard in options, I promise. You can very easily do it. The hardest part is putting that stop in and following it, right? And I think a lot of people have trouble with that because they think that trading is a consistency game. When they see people consistently make money every day, they want to make money every day, right? The problem is we care too much of our neighbor rather than focusing on ourselves. So when you see somebody be able to make a lot of money, you have no idea how long it took them, what their account size is, what kind of risk reward did they have, right? So the idea is that even if you're able to be, look, green 3 days and just have 2 to 1 risk reward, you still will make a lot of money. And you'll see that in the next slide after this slide. But in order for you to just change, right, going from step one to step two, don't try to go from step one to step four, right? Because if you try to do that, guess what's going to happen? You're not going to know what you corrected and how much you tweaked to be able to do that, right? To be able to make a lot of money. Okay. If you don't tweak it one step at a time, I promise you, you're going to get lost in the sauce and you're going to go back and you're going to have to start from here again. So, what I recommend is go from step one to step two, right? By making your stop loss smaller, right? Right? Let's say you choose this path. Okay, right? So you had a green of about 20 cents. So all you need to do is try to have, your stop loss go from 40 cents now, which is where you're probably at right now, right? Making a consistent stop loss of 20 cents. Okay. Right. If you know you can come in every single day, and this is why, I have these slides, guys. You should always do your research. Why are you following people blindly? We post summaries of our like trades, and you guys, these are the average entries. Look, 50 cents to 96 cents, $1 to 150, 36 to 80. Do this research, build this plan out. See, okay, if we're consistently making 40 cents every single day, then you should come in and try to target 40 cents, and your stop loss, I'm sorry, let me fix this. Stop loss should be, right, at least 40 cents negative, because you could always come back the next day, make 60%, 40%, 30%. You can make somewhere near what your stop loss is. If you're letting your stop loss go from 40 cents to 80 cents to $1, guys, then you're going to need 3 days to come back. It's going to destroy your morale. You're not going to be able to make money consistently, right? But if you have a hard stop at 40 cents, even if it's 1 to 1 now, right? So you followed the step and now you're on step two where at least your wins are similar or big, right? Just as big as your losses. And now you're on a playing field of even, right? You have chance of luck where you could have maybe 3 green days and 2 losing days and you'll actually make money. So it'll be 50-50 here, right? Where now, if you can fix this even a little bit more, where you make your stop loss even, maybe 30 cents, you have 1.5 to 1 risk reward. So you have a little bit better risk reward. But if you could just even fix this a little bit, you go straight to step, you know, three. Even if you have two, and I'm going to show you guys, look how easily it changes, right? Look, here, let's say each of this small green is 500 and each red is 500 and these big ones are 1,000, right? So look, you made 500, you lost a 500, you lost another 1,000, you made 500 and then you lost another 1,000. Now you're negative 1,500. This is where a lot of you guys are probably at right now, right? Now, look, here, just because you corrected that one little mistake, right? Right? Of making your stop loss being at least as much as your target, right? You basically made where is it? Yeah, $500, right? Basically, you lost only 500 versus losing 1,500. And this is why you should do paper trading and kind of, um, learn for a little bit before you move on, right? And you make big moves, or you try to make a lot of money, right? So um, here on the third year, and this was an example we gave for like traders for long term and so on, but don't you can do this in 4 months, I promise, right? But this is the realistic goal I'm trying to give you guys. Even if it happens in 4 years, I'm going to show you guys like what the benefit of this is, even if you are able to do this after 4 years, right? Look, now when you're able to make your, remember we talked about how even if you're able to bring your stop loss now to just 20 cents and your wins are just, you know, 2 times bigger, you could lose 3 days and win only 2 days and you'll still make $500, right? You'll still be green. As long as you can be in this phase, amazing. Even if you're stuck in this phase for 2 years, 3 years, it's still amazing. Because look, even if you're losing more and then you're winning small, right? Less days, you'll guess what? Still be profitable. And then year four, this is where the game kind of changes because look, let's say you have a big green, and big green, and then you lose 2 days, but you lose small. Look how big of a jump it was. So from 1500, you go straight to negative 500 to then positive 500, right? And then to straight to 2000, right? This is trading with just, $1,000 account as an example, right? So this is what we're trying to do. We're trying to achieve this where you're trying to go, from this horrible phase to being able to just control your stop loss. Put a stop loss. And a lot of people see like what you guys don't understand is, right? To jump over a slide, right? Is this that if you know for as an example, right? To give you guys an example, right? If you know that you can always come back, right, and make $300 to $500 the next day, even if you let's say break even here, right, and you go zero and you go zero, right? So you made 500, you lost 300, right? And then you made another 500, you still made what? $700, right? I'm gonna reset this because we're gonna use this for later, but this is kind of the example from the trades that we took this week, right? But if this is what we're doing, even if you do half of this and you just break even on Tuesday and Thursday, and then, basically when the stock came back down, you exited because, you didn't make any money, but you made 50% the first day, the 40%, and then, another 50% the next day with $1,000 account, you made $1,400, right? In 1 week. A lot of people don't, like have to work 8 hours to, I would say not even 8 hours. I would say like even 16 hours to be able to make this. And you're doing it with the click of a button with $1,000, right? If you go open a business up right now to be able to make $1,400, I bet you right now, in a week, you need about 100 to 200K investment. If you go buy a Subway for like literally 150K investment, you'll make basically max $700 to $800 a week profit. You're making more than what that guy has put in for 150K for $1,000 investment. It's insane. And look, to motivate you guys just a little bit, right? A lot of people don't understand the idea of options. These are QQQ 529 puts that we traded, right? Look, these are the ones that we traded on 124.25, and I can show you guys the entries. And we did this with our group live, right? We were on a call when we did this, and I'm going to show you guys in the chat room as well, just so you guys kind of understand that, there's no like BS going on here, right? But look, we entered around 50, where was it? Oh, these are the 29s. Okay, we did the 31s. Where are they? Here are the 31s. Where are the 31s? Okay, they're here. Let me show you. I have them open. There we go. Right here. These are the ones we traded. Okay.
The ones we traded. Okay.
Guys, try to please be on mute if you don't mind. So look, we entered on these around 50 cents, right? 55 cents on the 9 EMA. And these ran up to $3. Okay. Right.
Right.
And the idea that I wanted to show you guys with these 529s is this, right? That let me close this off, right? Is that even if you're able to catch these, let's say these 529s, right? 4 years from now, right? 4 years from now, you're able to take one trade and you're able to put in $15,000 here, right? Right? And you're able to exit at 80 cents. That means you turned $15,000 into almost $80,000, right? And if you're able to sell at 130 at the top, which of course nobody does, you turned $15,000, right, into $130,000. That's one trade. And trades like this happen every single week, three, four times. Look, to give you guys an idea, look, we caught another one literally yesterday, 143%. This was very lucky because look, we took two trades. One of them was break even. This was basically a losing trade. We let it be, basically go to zero, right, in the afternoon. So we're like, okay, whatever we put in, it's gonna go to zero. Netflix earnings came out. These options went up to 80 cents. Crazy, right? And these type of trades happen all the time. Look, this is last week. We caught another one. Look, on 116, 124%. These are average exits. And look, yesterday's trade, the one that I just showed you from 52-cent entry, we exited at 96 cents. So look how many of these trades probably went up 3, 4, 5, 6, 7, 800% that don't even account for because I'm showing you guys the average entries and average exits, right? So even after 4 years, if you're able to put in $5,000 into a trade or 10,000 or $15,000 into this trade at 15 cents, and you're able to exit at 50 cents, even half of this move, right? After 4 years of learning properly, you turn 15K into 50,000. You do that four times, right? In a month. How much money is that? That's $130,000 or so, right? So that's the key. Yeah, so there's a lot of technical stuff, man. Technical stuff goes very deep because, like same thing. A lot of people, think that you can just kind of teach like 10 years of knowledge onto somebody, right? Like I could lie to you and be like, yeah, I can teach you guys everything. I'm telling you, like learning about the technical analysis, like we usually use our buy and sell indicator to literally honestly take a lot of the trades. And then we have, look, stuff like this. Let me show you guys how good this is, right? Look, we took this trade at 50 cents. I didn't even have an idea that there was a gap here. Look, there was a gap on these options from yesterday, right? On the 23rd. So, I mean, so 2 days ago, right? Around 240s. And look, these options went from 50 cents all the way up to 240. So that's 5x. So that means that if you were to put in, let's say, $50,000 here, you could have exited with $240,000, right? Literally $240,000, right? With no stress because you knew there was a gap here that was going to go fill, right? And if you're able to just catch one or two of these trades a week, I'm saying, right? And the whole idea is going back to here is this that a lot of people don't want to be negative, right? So my kind of idea goes back to this that these don't have to be what your week looks like, right? This could be what your next 5 green trading days look like. So what do I mean by this? It doesn't have to be that Monday, Tuesday, Wednesday, Thursday, Friday, right? It doesn't have to be this, right? It could be Monday, Wednesday, like we're supposed to go on the profitable side, but like look, Monday, this could be Wednesday where you took a small loss, and then Tuesday was break even. Thursday, break even. Now Friday, you took a big green. Monday again, you took a big green. Tuesday again, you were break even only means that you didn't make anything and you didn't lose anything. All you did was if the stock went up from 20 cents, right? You put your stop at 20 cents. Right now it's up 30%. Why are you letting it go negative? Why? The whole point is if you don't make money today, who cares? You could always come back the next day, have a better chance of having a big green and a small red versus having a, huge red because you held. The whole idea of it is even if you take one good trade in a week, guys, I'm telling you, like literally, remember having, let's say, break even, and then just one big trade like this where you put in $20,000 and let's say at even 20 cents and you're able to get out at $1, you turn 20,000 into 100K. So you made $80,000 profit That's how easy option trading is. Literally. The idea is when you kind of have the wrong expectations of being able to be profitable every day and being able to have to make big money every day is kind of messed up. You shouldn't do that. And if you're trying to follow somebody that's doing this for 10 years, he's going to do it way better than you and he's going to do, you know, um, you know, at a way bigger scale than you. You're not going to have the capital, you're not going to have the money to be able to do it, right? Yeah. So, the same idea, right? Like one trade, and then another thing, right? I want to kind of show you guys why you shouldn't hold, right? So now I'm going to zoom in on this. You guys can see this properly, right? Like a zoomed in version of this, right?
Yeah, yeah,
Yeah.
man.
So look, this is the time decay, right, of QQQ options, right? Theta. Okay. So look, if these options, if the price of QQQ doesn't move even $1, right? These options at the money, these $1.48 options are going to lose 60 cents, right? In one day. And that's probably, that was Fridays. On Monday, if it stays like this, right? If it's
In the
Monday's
morning.
expiry, it's gonna go to zero. These are gonna go to everything in the black here are gonna go to zero. So you're basically 50% of the options are gonna expire worthless regardless. Okay. Now look at these. As you move up, right? These are all losing 30 cents, 40 cents, 50 cents. These are all losing 30% at least or 20% at least of the value. Okay, no, so mind you, these are some of these are very, very expensive. One second here, guys. Let me try to mute
Can you leave it
everyone.
in the morning, but
Okay. But as the price goes up, see, like the theta doesn't really mean much because you're so deep in the money. But even then, guys, I still promise you, as these options lose value, right, day over day over day, right, holding just doesn't work in your favor, right? If you're trading these $10 options or $15 option or $20 options, you might as well trade the stock. It's kind of the same idea, right? The reason why we trade at the money options are one because the theta the theta is whatever, but the delta is going to go up from 50 cents toward a dollar, so you're going to get the benefit of that, and these options are super cheap compared to the stock price, right? And you don't have to pay $1,500 per contract and make maybe $1, which is, what percentage is that? Not even less than 10%, versus where on these, if you make $1, right, you make 100%, right? So what's the point of trading these 12, 13, 14, $1,500 options, right? It's not really beneficial to actually, utilize the options, volatility. So the idea is if you hold, you'll always lose regardless, right? Regardless, you will always lose. The reason why I wanted to show you guys the 529 I have here was because look, these options went from 28 cents all the way up to $1.30, right? And then look, all QQQ did was hang around 529 to about 530, and you lost all of it. It went to zero, right? Those options, like, look, QQQ made this huge move. So basically, those options started moving from here, right? Those options started moving from here all the way down. Look how much big of a move it was from 531.50. It only retraced about 30% of the move, and you lost all of your options value. All of it's gone to zero. And this is so what I mean that 80% to 90% of the options are going to go to zero, and you're just bag holding you're basically betting on the losing side. Even if you lose a little bit bigger, so for instance, if you're here and yes, your planned loss was 20%. Even if you lose 30%, even if you lose 40%, let it be, get out at 40% because you could always come back tomorrow and make 40%. If you let it be 100%, then it's going to take you 2 days for it to come back. And then what's going to happen is, guess what? You're going to get stuck in this little bit of a, you know, idea where you're going to be like, well, I made let's say you bought these options at 60 cents, right? Okay. Now these are at 120. You're going to be like, shit, I lost money yesterday 100% and I made that 100% today, but let me do this one cool thing, hold these for a little bit longer and see if I can make today's money as well. Guess what? You're gonna hold, and guess what? They're gonna go to zero. So you're gonna lose out on this 100%, and you're gonna lose out on the next. And you haven't made anything back for the loss that you already have, right? So try not to get stuck in that little bit of a shit show where why? Just keep your hard stop loss at least at 1 to 1. If you know you can make back 30 to 40% tomorrow, hard stop loss should be 40% every single day, regardless. You shouldn't have to come and ask me. You shouldn't have to come and ask anybody. If you know that you can come back tomorrow and make 40%, amazing. Cut your losses, right? Yes, we are recording this, George. Yeah. And the the whole idea is to be able to become proper trader by just being disciplined, guys. It's simple. It doesn't take too much. You guys see how easy it is to go from step 1 to step 2. It's just as easy to go from step 2 to step 3. I promise. Because look, all you're doing is now your losses are even. You're going back to this chart again and you're like, okay, I'm gonna make my stop losses just a little bit smaller. Right? Now you're basically near step 2. All you need to do is do a little bit more correction where maybe you're going to make your target be a little bit bigger. Now you're targeting 60 cents, but you're stopping out at 30 cents. Look, you're at step 2. You're profitable now. And then as you become more confident, more better, then you can make your stop loss even smaller and have these huge winning days. Let's say it happens 4 years from now, guys. $20,000 in, $120,000 out. $20,000 in, $120,000 out. You cannot make this type of money even if you are doing, I don't care, any job. Unless you have a business and you have, passive income coming in from just, the business growing at a different, the being the 0.01%, or you hit the lottery, right? Being able to do this even 4 years from now, 5 years from, 10 years from now, even, right? You're making somebody's whole salary in one trade in 1 week, and then you have multiple opportunities of doing this in a week is insane. And this is where I recommend also all of you guys that are watching, why aren't you doing your research? Why aren't you looking at the traders you're following? Why are you trying to go after trying to grow? This is the idea that we kind of live in now. People want to grow $1,000 into $1 million. How do you know that when you reach that $1 million, it's going to be enough? It's never going to be enough. You're going to want 10 million then. And when you're at 10 million, you want 100 million. And guess what? You're going to have a couple of bad streaks and you're going to lose all of it. Isn't it better to be consistent, to be able to do this where you put in 100K and then you get 800K, right? Put in another 100K, get 800K, put in 100K, get another 800K, and do it that way, even if it happens 30 years from now, right? I mean, maybe not 30, but if you could just work on this whole idea of, making your stop losses at least be 1 to 1, it's not difficult, guys, because options are so volatile. These type of moves happen every other day, right? To give you guys an idea, let's go into the chat room and let's go into the boom trades here and show you guys, look, yesterday at 12:37, we took this trade at 52 cents, 531 puts, right? You guys can time match this, right? Let's go into the chart actually. Why even do it that way? Right? Look, where do we take this trade? 37. So in between this candle and this candle, right? Let me move this a little bit. Where was the price? Right? Look, between this candle and this candle, right? Where was the price? 55 cents, right? To 52 cents between these two candles, right? And of course, guys, you have to understand the analyst gets in a little bit earlier, and of course, and so on. He has to get in. But look, 37. I'll show you guys exactly what the chart looks like, right? Look, right? So he got in on this candle, I'm guessing, right? We alerted here, right? But same thing, 2 cents, 3 cents doesn't make a difference when these are going to 150 right away, right? And this is what I mean. And look at the trade before that we had, right? This morning, right? 9:36 on January 24th, $1 to look, 164, and these probably ran way more, right? So the idea is you just have to be able to put in the work. A lot of people don't want to put in the work. I'm sorry. It's so simple. Do your due diligence. We show you guys that, like, we post very, like all of our results in there for you guys to see, right? Like, there's no reason why you shouldn't sit with a pen and paper and go back to step one and build a plan for yourself on how you're going to trade. Okay? Because remember, I cannot come over there and click the buttons for you, trade for you. Can't do that. Because if I were to do that, it'll be, too much going on. And I don't think I'd be able to trade my. So the whole idea to give you guys, like, as an example, if you know you're going to come back tomorrow and be able to make at least $300, hard stop at 300. And let's say you don't make anything here. You don't make anything here, right? 2 days, you had a good move, you had a 30% move, and then it came back down to zero. You stopped out at break even. You still are up $700. With using what? $1,000. Now imagine being able to use 10,000. You're up 7,000. Using 100K, right? $70,000. This is 1 week of just morning trades. And we haven't even gotten to the afternoon trades. Right? And these are the same thing you're trading with, let's say, $300. I'm sorry, I forgot to correct this. This is supposed to be 300, and this is supposed to be 1K per trade, right? But now, if you risk 300 and you make, let's say, 150%, you made $450. And let's say you don't even make anything this day, right? You don't even, and this day you make only 100%, and then you lose 100%. You're still up $450, right? And guess what? If you do this with now 3 times as much, guess what? You make 11, around 1,100, right? So you put in about $1,000, let's say, right? And then the same thing kind of goes on when you trade like this with, let's say, a 10K account, right? Imagine making 150%, that's 15,000, right? And then making 100%, right? 10,000, and then losing even 1,000. And look, you didn't even trade this day, you didn't trade this day. And if you had another, let's say, 100%, right, or so, it's so much money. It's actually stupid, but it's just you get too afraid of losing on a day that doesn't matter. One day out of the 20 days, guys, it means shit, like zero. It's who cares if you don't make money that day. That day is worth, like, if you didn't make money on a shitty fucking Tuesday where the stock went up in your direction and came back down really quickly and you stopped out at break even, this, who gives a fuck? Who cares about this day? It's 1 out of 23 trading days in a month. It's 1 out of 5 trading days in a week. Who cares about that shitty Tuesday? Who cares about this Thursday? As long as you made good money on Monday and you manage your risk, and then Wednesday you lost, because that happens. That's part of trading, right? Yeah, you have to size down in the afternoon trades. I mean, unless you want to keep them as two different entities, because the problem is, right? If you are a trader, I'm guessing, right? And you, let's say you make $500 in the morning and you trade with $1,000 again in the afternoon and you make 150%. So you made about let's say $1,500. This is gonna make you feel like morning trades are worthless. Then you're gonna do stupid stuff the next morning, right? And then the same thing on the negative side, where you make $500, but then you lose $1,000. This 500 is gonna mean nothing. Where if you put in $300, you're risking basically the profit from the morning, max. Even if these go to zero, you lose basically the morning's profit, right? Some of the profit. But if you make 100%, then you basically double your profit nearly, right? And if you make 150%, you make basically double your profit. So I recommend third of it, but if you want to do half of it, it's good too. you know, right? Let me know, guys. Now let's go into questions. Basically, other slides are good. I think this is basically it, right? These are for like the swings, but we'll kind of, we need to fix that a little bit for the, but mostly it's a kind of the same idea, right? Like stop at break even after the stock is up, but these are a little bit, rules are kind of deterred toward the swings. We don't want to look at those, but we'll do this again for the swings too at some point. But let me know what you guys think.
How about scaling the profit, Manny?
How about scaling the profit? Yeah, I think that's going to be cool because that's going to be on this slide actually. I was waiting for somebody to, kind of talk about this, but the idea
What
of it,
about over trading? What about trying to chase? That's one of my biggest
yeah,
problems.
yeah, look, it happens to us too. Look, on the 13th, right? We took three trades because we just were trying to chase and make money. Look, we had one good trade where we made 20%, right? For a lot of people, 20%, right? If they're trading with a $10,000 account, that's about $2,000. It's very good, right? But
Right. No, I'm saying, how do you get into the habit of just walking away? Let's just say you had a good day, and like you said, everybody's gonna have a bad day. Like the habit of just you trying to make your money back today makes you lose a lot more. That's the one habit I can't get out of.
so th this is what I'm trying to explain to you. It happens to everybody. As long as you realize that, first, it's going to be easier for you to digest that. Guess what? Let me think about it differently, right? So there's a couple of psychology habits you could do, right? Which is literally feeling like you have to be disgusted by when this happens. You have to absolutely be so disgusted with yourself when you do this that hopefully when it happens the next time, there's a little bit of alarm that goes off, right? And guess what? Or, right? Look, we don't do this often, but it happens, right? You follow a group, and it's the same thing. If you want to be a basketball player, right? And you were to get put in with LeBron James, you would improve at a different level, even if he didn't teach you one thing. You know why? Because you're going to be following his habits. If he wakes up at 4 a.m. and he trains every single day, three times a day, and you have to do it with him, it's you're gonna build that habit regardless. But if you keep on doing the same thing where a lot of people do, they jump over five different chat rooms and they don't find somebody that's actually gonna be real with them and so on, guess what? You're gonna follow different habits from different chat rooms. It's gonna give you the same results. You're gonna be lost cause, right? So I think it's depending on the way we do it. If you ask our chat room, only time we do really bad is when we overtrade. Every single day, consistently, we try to do only two trades. Look, right? 14 two trade, 15 two trades, 16 two trades, 17 two trades, right? 21
Yeah.
three trades,
No,
and
so
then that
just a
day
quick
we actually
question.
lost.
So I just joined recently a few days
Yeah,
ago. My only question is, so you guys, so it's a routine to just trade twice a day.
that's
That's
it.
how you guys go.
That's it.
That actually works, because that actually takes you, yeah, out of over trading. Yeah, 100%. Well,
And then you won't even be forced to do it because you do one trade in the morning and then you do one trade in the afternoon, right? And if you
right,
journal,
right.
you'll see the results over time. Just, lock in.
Yeah, I just gotta keep putting a stop loss. That's one of my biggest things. I just gotta
Yes.
have a very strict stop loss, regardless if
Yes.
I'm up a million or down a million. It's gotta be a stop
Exactly.
loss.
Exactly. I think it's the hardest thing to do, man. I'm gonna agree with you 100%. When I started, it took me like 3 years to get out of that habit. But the idea of the habit is like, bro, if you just keep eating bad food, you will gain weight. Like you have to change something, right? You have
Yeah,
to
recently
change.
that was one of my bad trades where I got into something and I kept averaging down because the
Yeah.
contracts were getting cheaper, thinking that I might just break even, and I ended up losing everything.
Yeah. So look here, right? And the problem isn't that, right? The problem is, one second here. Let me actually end the live here. On TikTok. All right, guys, if you guys, for everybody that's on TikTok, you guys should join the chat room and you guys can join the live through the chat room. It's literally, on there, but we're gonna end it here.
Just a quick question. This chart that you have up for
Yeah.
the options, how do we get that? Is that like a script that you guys have on your own, or
Yes.
because you can
So
do this for the regular stock, but not options? I'm saying I see this is on I think this is on what, TradingView? Yeah,
this is TradingView, and the
right.
whole the let's get that one. I'm sorry, the point over with is when you average down on the options, if 80% of them are going to go to zero,
Right.
80% likely you'll lose money, right? And then when you size up, when you keep averaging down, what's going to happen is you're going to put in two times the money, three times the money. So then what's going to happen is you're going to lose 3, 4 days worth of gains in one day.
One day. Yep.
Simple, right? It's
Appreciate
literally there's no crazy math behind this. It just happens, right? And then for everybody that's, wants to access to the chat, guys, same thing. We have, the reason why we try to do right by kind of people in trading, even though we come off as like kind of annoying to be able to, have it like this. I'm really sorry, but if you're not diversifying in trading, you will more likely mess up very easily and lose money, right? The whole idea of our chat room is one, you need to be able to diversify, right? This is why we have the weekly trades, we have the zero DTEs, and we do two trades on the zero DTE. So we don't need to trade the weekly ones. That's why we don't trade at least me and Nick don't, but Raj does, and he gives the signals after that, right? But the zero DTEs, we do two trades and then we do swing trading, right? And then we also have, our script that if you want to, throughout the day, you see good signals, you should take those on your own. There's multiple signals, guys, every day. Tiger Crew uses it. There's a couple of people that, trade on their own and make 20, 30, 40%, right? But now the idea goes is like, do you want to invest in yourself or not? Right? So this is available in our pre-market plus program or in our, like, let's say mentorship program. But the idea is if you don't want to invest in yourself, you'll never make money, right? Same thing. If you try to go walk into somebody's, store, right? Go try to go walk into a Subway and be like, "Yo, I'm taking over and I'm not gonna invest in this and I'm just gonna take over the store and I'm just gonna I'm the owner now. I run that." What's gonna happen? In order for you to make any money, you have to get used to investing in yourself, right? And the same idea, guys. I always recommend this. Do yourself a due diligence. Guess what? Do diversification. Simple, right? Simple.
So Manny, like, how would you keep like two screens, like one for the call, like on the trading view, like?
I'm sorry, go ahead. What were you saying,
I
bro? I
mean,
was reading
you are keeping like two screens on trading view, right? So on the left, on the right hand side, you're keeping the call, whatever you took put
yeah.
or call.
I mean, this is not my setup, guys. I mean, my setup is three different screens where on the left screen I have almost a 50-inch monitor, custom monitor, where it has literally almost, 6, 7 different option charts. And then I have on the right side, I have literally 7 or 8 different charts of like Apple, Nvidia, and all of those charts to show me like where the market's moving. And the middle chart is where I trade in the middle screen, where at the top I also have the sectors which are telling me like is the market overall green. If, for instance, all of the sectors are red and then QQQ alone is pushing against it, what do you think is going to happen to QQQ? Why do you think we're so accurate? We don't pay attention to just one thing. We look at everything. If Apple, Nvidia, 5 other stocks that are in the top in the market are going down and QQQ is going against it, guess what? There's probably one stock that's pushing against all of them. As soon as that goes sideways, QQQ is going to pull back super quick. So then what you do is you set up for puts. You look at the puts, and then what happened with the trade that we took in the morning, guys, right? That trade where the gap filled on the 23rd was a trade of 50% that we gave to the intraday people, but it might have been quick for too many people, but same idea. 50% is just like it's so simple when you know what's going on. There was a gap left on QQQ, and we took a trade, and it was 50% in like literally 3, 4 minutes, right? Those options went from 50 cents to $1, right? So the whole idea is like you do need a lot of charts, whatever, but if you're just trading QQQ, like I think you could get away with it. I'm not gonna lie. I think it's not that hard to just look at two different charts, have the options on the right, and the same thing. I think the best kind of setup you could do is this, where you can have, you know, uh, the calls and the puts down here, and then you can have like the QQQ here, and then whatever QQQ is doing, if you see sport or a buy signal or a sell signal on the calls or the puts, you can go take a trade off of that, and then trade like that. It's very simple, right?
Manny, can I ask a question? Can you hear me
Yes,
okay?
of course, bro. Anytime. Yeah.
Okay, so cool. So I know you talked about how the stop loss that you should have should be basically the same as what you know you can make consistently. But with
Yes.
zero DTE, those contracts move fast.
Yes.
20%, that moves pretty fast. So how do you handle drawdown like when it comes to zero DTE?
Gotcha.
Just like trading it in general, I
Yeah.
don't know if you're gonna go into that later.
I'm gonna show you right now. Look, sometimes, bro, they get the best of you. We bought these options at $1, they went to 35 cents. They just
Damn.
it okay. If I would have let them go to zero, that's worse than 60%, right? At least on the next trade, maybe I would have learned, but no, I let them from 50 cents go to 12 cents. But remember, these are half the size too. So this is technically 35% loss, another 35% loss. Does that make sense? Right? So I kind of actually I did learn, you know, we did cut these off properly. But it's the same thing. Like if you keep it near 35 to 40 to 50%, it's good because you could always come back easily. But if you lose 60%, that's okay because it happens. There's going to be a day where it's not going to give you a chance. You're going to buy these options at 80 cents. They're going to start ripping so quick to 170. You're going to make 70%. So it
Gotcha.
evens out over time. But if you focus only on the one bad day and you put too much energy into that day, you, you then you're basically what you're saying is this Tuesday, either you make money or you lose everything on the week. Who gives a fuck about that Tuesday? You know what I mean? Does
Right.
that make sense? That's a
Gotcha.
random fucking Tuesday that who cares if it goes to zero? You don't make anything that day. Or you lose even $300. Who cares? Who cares? You know what I mean?
Gotcha.
Does that
Makes
make sense?
sense.
Because
Makes
it's
sense.
about tomorrow. It's about tomorrow, tomorrow, tomorrow. And it's just like tomorrow always could be better. That's the key in trading, right? Because it happens. Look, it does happen. Look, we took a loss of 65%. And then look, these are smaller options. So we're trading in the afternoon. These are afternoon trades where we're trading half the money that we were trading in the morning. We took a 75% loss, which is still really good because that's like 35% loss from the morning, right? Like sizing, technically, right? That's okay. But okay, sometimes it happens to us. Why did I keep trading that day? Why? If I know I could have come back the next day, if I would have just had these two losses, which were, 60% and another 30%, I could have came in the morning, made 30%, and then came in the afternoon and made another maybe 100%, right? Or break even. It took me maybe until this day to break even on this week, right? And then, okay, thank God we had really good kind of couple of days afterward. And a lot of these trades, guys, these are average entries. And remember, like, there's a lot of these trades where, we call out on the calls, like, we're adding, we're doing this, we're doing. So there's a lot of stuff that goes on with these where, we ended up actually making a lot of money. But it's the same idea. Like, don't try to, one day, cares? And this is where, when I see, like, I get super annoyed, guys, when you'll see like we'll have the greatest week ever, but somebody, because of their own mistake, because they don't have a stop loss in, they'll hold the stock for longer and they'll lose everything and they'll be like, this week was so bad. It actually like it's so childish to me that it's just like I can't respect, like any traders like that, right? Because the whole idea of it is, and the problem is, guys, I've been there. I've done that so many times, right? But I've never gone out and been like, oh, done it multiple times and it's the same idea. Sometimes you just have to learn. There's nothing I can tell you that's gonna make you feel better. Like you shouldn't have done that. That's the only thing. If I tell you that it's okay, like you can, make it back. Yes, you can make it back, but you're very much prone to making the same mistake again as well, right? We don't want you to make the same mistakes over and over again, right? We want you to learn and be able to not hold like the whole webinar. Hopefully, you guys learned one thing. Sell the fucking options, even if they're 30% down, 40% down, because you could always come back tomorrow and make more. As long as, and then watch, by end of the week, all 50 of you guys that are left here right now, if you guys are profitable by end of the week, send me a DM. I'm telling you, try it. Yeah, George, I know, bro. The Tesla never came back. I understand, but remember, like we already have kind of this chart that we put in where you're supposed to have same thing. Like if Monday you're trying to make 10, 15%, 20%, 30%, your max stop loss should be 30, 40% either way, right? You know what I mean? The analyst, you know, will do whatever he wants to do, you know? You don't have to be like the analyst because you don't know how much money Raj has. You don't know how he's trading, you know? Because remember, if, for instance, there's going to be a trade where, guess what? He might hold this trade where it goes negative for him 40%, but he holds it. It comes back, he makes money, and let's say you close it out. But let's say it might be another day on Tuesday where it goes negative against him and then it goes to zero. So he'll lose out on that and you'll make out on 40% extra on that. So it'll even out, just trade consistently one way. And it goes back to this. You have to put in a little bit of work and build a plan. You have to go there and write yourself a note and be like, this is what I'm going to do. I don't care what the analyst is going to do. This is what I'm going to do. And you're going to have to write that and sit there and put in an hour extra. No, bro, I'm not saying it's your fault, George. I promise. I'm just saying, like, as an example, like you have to go back and write like a plan for yourself. Because if you follow somebody that's like me, right? I have made enough money from trading where if I go into this deep hole of where I just keep taking bad trades and I keep losing more and more and more and more money, I know for a fact I'll be able to come back the next week. Some of you guys can't come back, you know? So if you can't come back, you limit yourself. If I have two bad back-to-back trading days, on the third day, I'm not going to trade, or on the third day, I'm going to size up 2x because I know that the strategy is proven because I have data from the past 15, 20, 30 days from the chat room that they barely have red trades like that back to back. You have to come up with a plan on how you're going to trade, right? So the whole idea goes back to like your account's completely different from my account. To eliminate the emotions, build the plan, right? And bro, I'm not gonna lie, you're the only person that I always look at, man, and I'm like, bro, like my guy, like some of the trades that I gave, I promise, was because of you. I think you're law by any chance on the Discord, right? I'm like, yo, but sometimes when you get stuck in one trade, man, your money's involved in that trade. Let's say if that trade starts to go down 30%, like 40%, 50%, now 60%, all your money's invested in that stock. And then you can't focus on the next trade because if the next trade is 100%, you could have made all of your money back times two, but you were too stuck on that one trade. You don't want to do that. Comes back up. So ETF, so your stop loss gets hits, and then it goes back up most of the time, right? So what you do is you draw this line. Look, this is gonna be the simplest trading lesson that I'm gonna give you, right? Look, let's say we're gonna zoom in on this chart, right? Okay, and no, we don't need to write a text. We need to, let me see here. Where is a shape? Okay, right? So we're gonna make this into yellow, right? Okay. Let's say this is your entry, right? Your entry is here, okay? It goes down, hits your stop loss, and then 30 minutes later, it goes back up, right? Okay? So what you do is, right, you draw this line, okay? This is where you entered. Let's say anything above here you entered, this is your stop loss, which is basically right below the 9. Let's say that, right? Now, second thing you're going to do is this. Do a little bit of support and resistance, right? You're going to see this is where it stopped you out. Where did it make the next base? Well, it made the next base down here, and then it's holding, right, this level. Okay, so now, right, what you're gonna do is you're gonna try to get in the middle of these two tops, right? So this is the top, this is the bottom, right? You're gonna try to look for a pullback on the 9. You're gonna get in here, and then you're gonna hold, and you're gonna give it this bottom. If this bottom breaks, most likely these options are gonna come back. If it breaks this top, then you put your stop loss at break even, basically, right? Or actually above break even, which is basically this lower top here, because it's never gonna get below this. If it goes below this, it's never going back up, right? It's kind of the same thing. You want to start like putting these support and resistance levels, right, on these, high highs, low lows, and then just basically play off of that. Once it breaks out, where's the next resistance? The VWAP. Where's the next one? This 50 EMA, right? Look, guys, I try to do a good job of trying to explain to you guys. Look, we go into the algo chat. Look at that trade that I took. What did I say? Right? Look, I was like, guys, look, we're long here. Our next target is where? 80 cents. Right? Look. Look. I was like, there is a gap here at 30 cents, right? So these can come back very easily, right? To come fill that gap, take profit at 80 cents. We entered around 50 cents, so we had almost 50% there. And then look, the next resistance technically on these 160s. And then look, kept on going all the way up to 160s once, so these went up to $3 from 50 cents, guys. Like I could say, like, if we wanted to, we could have easily lied to you guys and been like, nah, we hold till $3. No, it's not the reality. It doesn't happen. I'm sorry. You buy here. If you're a day trader, you do it that way. We also had a swing on options on QQQ where overnight we bought around, I think it was $1, and the next morning it opened up $4+. Okay? But then on the swings, the same thing. If they go to zero, they go to zero. But there's different strategies that we're going to test out with NDX options and so many options where if you get continuations, guys, they pay 50 to 1, 100 to 1. Right? The whole idea is risk reward.